Okay, so guys, based on that thing I just said, I'm just gonna be showing you guys exactly how I choose my trades. Okay, it's different a little bit from what you guys know. So you already know the higher high. Look at this trend. This trend is bullish, right? So we already know that. How do we know which one is the higher high? With the candlestick, right? Normally, what you'll be doing is you'll be drawing from the high like this, um, to find your next high and your low, and then your next high, and then a low, and then your next high. It's also a good way to do it like this, using the path tool to find it, but it's kind of not the ideal way because there are more than one kind of trend inside the trend. So it's best to just identify what you're looking for and just leave the rest, just forget that, because sometimes you probably, let's say you're stuck in the market somewhere here, you're not going to be expecting the market here to be showing something like all this stuff. You do not know your high or low. So what we're just going to do is this. We're going to divide. This is the first candle, this is the second candle, and this is the third candle. The candles, the highs of these both candles are lower than this, so this is a high. This is considered a high for me. So I want to change this. I want to make it I'll make it dark blue. So yeah, it's a high for me. This is low. It's lower than the two candles beside it, so it's considered a low for me. That is exactly how I look at highs and lows, right? Especially when you're looking at candles like that. And so just like that, I do this. This one is higher than both sides of this, so it's a high. I don't want my this thing to be too small or big. It's relative. And the same thing goes for this. As you can see, you're now noticing a pattern. It's wait. This thing is too small. Uh, yeah, this is much better. Look at this one. You can notice the price is actually consolidating here, right? Now price pushed away from that consolidation zone, but there's something that we need to identify. Look at this. Price was consolidating inside this range, right? If you draw a line here, price was trading inside this range. But how do we know when price is trying to move to another direction? We need to see one thing. That is the primary driver of our trading strategy, because our trading strategy was coined from ICT, SMC. All those concepts are just driving on one particular movement: fair value gaps. Fair value gaps, so people call it the impulse. You can call it the impulse, you can call it fair value gap, you can call it displacement. The correct word we want to use for it is displacement, but it's still the fair value gap. Okay, it's just when they see two candles like this, you see the first candle here, and then there's a second candle here. The wicks of the the second candle is in the middle candle, and then there's a third candle, just like we're doing the highs and the lows. We're just working with three candles, and then there's a space between the high of the first candle and the low of the second candle. That space is called the fair value gap. If price comes back to that gap, we want to start to look to buy or sell depending on the scenario. But now look at this case. Look at this. We have consolidation here, and price came lower than this level and then pushed back into this range, and then we start to see a small high inside here, like a consolidation again, all over again, inside that same range, to show you that that range is really strong, and price is not decided to trade away from that range. And finally we now saw a push away from that range, as you can see. So we had a push away from this range. Let me just, I don't want the circles being too big like that. This better. So we seen price is trading, was trading sideways, pushed a little bit down, broke, went below this point. Let's mark this out. So price traded below this level. So when price traded below this level, what do we see? Push down, now going back up. Some people say, oh, but it broke below, it closed below. Oh, is that so? Do you see any fair value gaps? No. So don't take it as a continuation to continue selling. the fact that there was no fair value gap, we don't want to be involved in that, right? And this is a high time frame. We're just looking for our draw on liquidity. And so the next point is this high. And when price came and took out this high, what did we see? We saw a fair value gap being formed at this level, right? Let me adjust some of this. This one was not lapping on that candle, so let's do that right now. So we're seeing this, right? Fair value gap. This could be treated as an order block, right? Because that was the last candle before the push to the upside, and we broke structure with that. That is exactly what we're looking for. This is what we're looking for. And if you look again, you can see price didn't just stop there. It created another fair value gap. You see that? It just displaced above that high. It was an intentional move. The moment price pushed away from here, we now know, oh, we're now bullish, right? This is just the only thing we just need to know. We're bullish because we had lower high, lower low. Now we have a higher high, right? Look at that. Higher low, higher low, higher high. Do you see that? We have higher low and we have higher high. Here we were having lower low, we were having lower lows and lower highs. Now we're having higher high and higher lows. So we're looking to buy. Now when price came into this range, at this point, when price came into this range, I'm going to be looking to buy, right? From this fair value gap, this fair value gap, and this one. Now I'm more favorable to the demand zone, which is all the way down here. I could still take like this consolidation candle, right? Because that's what I think. I'm like, oh, this is a consolidation candle. Price is going to come back to consolidation. That's my thinking thought, my thought process, because I'm doing AMD pattern, is because that's my trading strategy. So I did do power of 3. So I just go to the 4-hour time frame, and let's go back to where we are. So look, are you seeing that? You see the way price was trading inside that range. There was no trade for us from September, October, unless we're going to trade like lower time frame stuff. But if we're going to be on the high time frame, there was nothing for us, right? So look at this. There was no real opportunity. So when price came here, we're looking to see buy model as price came into these levels, right? Remember, we had a consolidation right here, and look at that consolidation right here as well. So when price came into this range, we knew that there was no way price was going to go all the way down here, because there was nothing to trade down here. So price was just going to come. When price came, we saw price taking out this low. When price took out that low, I was like, okay, let's see what price is going to do. It traded back into that range. We had a push to the downside here, which was a fair value gap, but then this fair value gap did not do anything significant. We're just gonna watch and see what happens next. We start to look at what price is printing. We start to see highs, lower, higher lows, highs, higher lows, highs, higher lows. And now with that, already seeing that, I'm now seeing that price is traded above this fair value gap, and I'm seeing, oh, we're now moving to the upside, right? We're moving to the upside and we're printing higher lows. And then we now have the point where price traded above it, we had a fair value gap to that side. And I'm like, okay. And I'm seeing demand zone here, right? A new fair value gap here as well. And I'm just seeing that like this. And so I'm like, okay, that is my signal to get into the trade. So I'm just going to place my buy order, right? And you see price came back into that range and tapped into it. My stop is going to be below that swing, because if it goes below there, I'm going to be wrong. And I'm going to take it to the new high that was created, which is here. And that trade is going to give me 1:10. Are you seeing that? This is the beauty of trading high time frames. You just already know where you're expecting price to come to. You expect all this. Look at here. The first fair value gap that happened here. What happened here? Price did not give us any such things here. It was just seeing lower lows, lower lows, lower lows. There was no higher high. right? So here we had a low, we had a higher high, we had a higher low, we had higher high, higher low, higher high, and that was a three pattern movement. We already saw that movement was three times. We had the first one, second one, and then this one. And so we just already confirmed. Then we had a fair value gap to engulf this level, and that was the break. That was it. That was all we needed to see for us to get in on this trade. And this trade was a beautiful trade. Look at that, a beautiful, beautiful trade to the upside. You could have entered multiple positions here. You could have had lower high, higher high, and when you saw the higher high, look for opportunities here, or maybe lower time frame. Then you could look lower low, lower high, higher high, lower low, higher high, lower low, higher high. Okay, we start to see consolidation here, and then we finally saw break. Moment we saw that break, that was a re-entry, bro. That was a re-entry. Now our previous stop loss is gonna come below this level, and then we're gonna be looking to get in on a new trade. And then we saw that this was the fair value gap that led to that push to the upside, and so we just go mark out the fair value gap. If you go to a lower time frame, I could literally know what lower time frame looks like when price comes back into this range, but you probably not very advanced like that. So what happened here is that when price came into this level, we had this new high, right? We had this new high. Price pushed back a little bit, but it was a higher low, and then we pushed back to create equal highs, and then finally we continued to push the high side. But the point is, we created higher lows, right? And so the whole idea is that we're bullish, and so we put our entry here. We put our entry from this point because we're looking at an area of consolidation. I'm looking at this last consolidation before that push to the upside, and then I'm looking at buying from that level. So I'm buying from the level of that consolidation, and I put my stop below the swing. I don't want price to take me out unnecessarily, so I'm taking my profit at the same previous target, and that is going to give me 1:5. And you can see his price just tagged and continue going, so you could always catch a move even if the move is already moved. What am I even saying? So that's the beauty of it. You don't really need a lot of things. All these things we're talking about inside here is the same thing that we were doing on the high time frame. You're doing the same thing on the high time frame that you're going to do on the low time frame, just so that you can maximize your profits. And if we go back to the high time frames, let's go to the weekly time frame. All right. You're gonna be like, okay, we've taken that trade. Look at how small where we took the trade was. Look at just how small it looks like, right? This how small it looks like. So let's go to the next opportunity. And so we now know that we're bullish, and we have lower low, higher low, and we have a new high, right? We have a new high somewhere here. I don't know. Just I don't know where is the new high, because the next new high, it has to be this high, right? So at this point, we're just seeing price trading beyond this point. And when price traded beyond this point, we start to see another fair value gap formed here, right? Fair value gap. Fair value gap is something that gives us a lot of trades. Like, fair value gap is our bread and butter. Without fair value gaps, I can't really see trades. And if my fair value gap fails, I'm just done for that day, man. Just cooked, because I trust this thing so much. Like, it's the whole idea of the strategy. The fair value gap is the lifeblood. So I go back to the 4-hour time frame. All right, where is my push? I have to reduce this thing. This thing is a little bit too much. All right, and it's not even in the at the appropriate place. Let's shift it correct. So we now had that breaker structure there. Now we had a breaker structure there. We had the fair value gap, and we already know that this whole range was our demand zone. This whole range, the whole range was a demand zone. So when looking at, okay, since this was the last place we were looking to invalidate our trades, that means price is not supposed to go below this point. because we're supposed to continue going higher, not lower. So now we had this breaker structure here, and price came back. We had this consolidation thing here, and price came below that consolidation, and we had this fair value gap thing that happened here, right? So we're looking at how do we get in on this trade. So we cannot just get in because we have a fair value gap that pushes the downside, but we're bullish, and so we're looking for buys. And so when it came into this fair value gap, we started to see this retracement here, and then we had higher high, higher low, and we had a push to the upside. And price finally traded above that fair value gap. We did not get in. We cannot get in because we cannot. We just cannot get in. It's going to be too risky. It's too risky to get in on a trade here. So what do? We wait, and we wait. So price came back because it has taken out this level previously. It knows that it's going to have to come back to compensate for this level. And we had a consolidation here before that impulse to the upside. So this was a consolidation, sweep, and a break to the upside. So it was a one movement to the upside. And so we consider this consolidation zone as our new entry zone. And look at how many days it took. It took a lot of days, man. It took days before it happened. So patience is really key to navigate the markets. Really key. And my stop loss, okay, my stop is supposed to be below the swing. Now normally when I'm really aggressive, especially when the good risk reward is not in my favor, I normally reduce my stop loss to just the consolidation point. So as you can see here, price came back into that range, tagged in, and continued going to the upside. Are you seeing how beautiful that is? Dude, look at that. This is absolutely beautiful. There's a 1:4 profit, and it's going to vary from time to time. And if you go to another time frame, you go back to the high time frame, which is the weekly time frame. Are you seeing how I'm going back and forth between the weekly and the 4 hours? That is where I'm trading from. Do you see that? I am trading from this level to this level. It's just a sequence, right? I'm doing this thing over and over again. Look at that. I'm taking that trade slowly. And then when I go to the high time frames, I do not see any fair value gaps. Again, nothing. We're just seeing high staking, and there's nothing for us to trade because I need fair value gaps. I need that fair value gap. I need to know where I'm going to get in or where I'm not going to get in. So if I'm very desperate to take a trade somewhere here, I'll go to the daily time frame because it's the second high time frame that I know. And remember that we just took a trade from here, right? Took a trade from here, and then after that, after this trade hit TP, we had this expansion, right? And then after that expansion, the daily is a little bit more messy than the weekly, so you gotta be careful. And we have a new fair value gap here. We're already bullish. We already know we're bullish. Unless we become bearish, we're just bullish, right? So I'm just showing you that you can use any time frame that's the high time frame to do this. So because we're using the daily time frame now, we're gonna use the 1 hour to confirm this, right? So I'm going to use the 1 hour. So this is the new point. Yeah. So we waited for the price to give us what we're looking for here. So when price came down here, we're seeing lower lows, lower highs, lower lows. When we came down here, we saw higher high, higher low, and then price pushed to the upside. That was just all I needed to see. That was all I needed to see, that higher low, higher high. And when it happened, we had a consolidation. We had a consolidation candle here. But a consolidation candle here just before that push to the upside. A consolidation candle here. And that is where we were looking to buy from. Yes, that's where we were looking to buy from, which is here. You could also see that there was an even bigger one here. You can see an even bigger one here. If we're just looking at just the bigger ones, you can look at this one. Is also a consolidation. It's trickier to trade on this kind of time frames. But if you want to simplify things for yourself, you can still use the 4 hours. It's not really that bad. You can still use the 4 hour time frame. look at that. And so on the 4 hour time frame, what do you see? Low, high. And so we know this is the consolidation point that tagged into this level that gave to that push the upside that created a new high. And so therefore we want to trade away from there. And so this is the consolidation level. And so we're looking to trade away from there. And if we're going to trade away from that consolidation level, we want a very good price. But this is a daily time frame setup, and I want to get in on a better price. So I go back to the 1 hour time frame. So you literally need to use the daily and the 1 hour. Really, you cannot separate them from themselves. Normally I would have been looking to take a trade from here, but price never came back to that level, which means that we'll have to wait for another trade because price did not come down to the level I was expecting. Now when price comes here, we see price is expanding to the upside, and we create new high, right? And then we create a low. And so when price does that, I know that okay, the trade that I was waiting for is already gone, right? We've created new highs, new lows. There's no opportunity for to get in on that trade. We just have to wait for the next opportunity. Now the next opportunity is gonna come, but the next opportunity is gonna come from the same level that we're expecting price to come from previously. So we're gonna mark out the consolidation before the impulse to the upside, and that is exactly where price came back to. And we're gonna buy from there. We're gonna buy from there, put our stop. We could put our stop below the swing or put our stop below that level. It's just really up to you, depending on your discretion. Let me see the target for that hold. This is 1:6. If you put it down here, is 1:2. So really, I'm just gonna take this 1:6 kind of one and just hold it out till I get to my profit target. It's really a good deal. Look at that. It was absolutely a good deal. But price could have literally come back and taken me out just before, and it was still in that good zone. So it's always safer to put your stop loss below the swing than to just put it here. But really, it's most likely gonna hit the target first. So it's a gamble on your part. So you're willing to take the gamble, and it's just what it is. Okay, it's what it is. And so this it's already look at let's go to the weekly time frame. Let me show you something. So on the weekly time frame, you saw that we did not have any other higher lows, higher highs here until this point, right? And that was also the same time we saw a trade to take. That was the only time we saw a trade to take until we saw that price creating that level like that. We didn't see any other trade to take. Look at that. Until price created that high. Look at that. If you look all the way here, the next high is higher than the next high, next high is higher than the next high, and then it did not give us chance. But when we saw that chance here, then we knew that we're gonna take a trade, right? Once we saw that, we're expecting a lower low. That is normal thing. We're expecting a lower low, and so because we're expecting a lower low, we're expecting price to go a little bit lower, just a little bit, just so we could get a new higher high, and then with that in mind, just that alone in the back of your mind, you already know that you are one step ahead of the game. And look at that. Price moving from high low to high high, high low to high high, just like that. It does not skip the process. If you look carefully, there is always a higher low or there's a higher high. Something. There's always a higher low, it's always a higher high. Look at that from here to here. And then we have from here to whatever. I don't know. Was there a new one here? I don't think there's a new one here, but it's just high low to high high. You can just see that. It's a schematic. It's just like that. It's look at that. You see that you could use this one and just do that, but it always leads to a high low or high high. Just expect that. And so if you go to a 4 hour time frame at that level where price traded a little bit below, what we're gonna see, all right, a little bit tighter. Okay,
we're gonna see price is a little bit too. We're gonna see a bit. Okay, this was the level. So when price came down here, we saw price came back to this range, right, on the 4 hours, and we're like, oh, this is our 4 hours range. Remember that, right? This is our 4 hours range that we marked out, and we're like, oh, price is gonna come back to it, and price did come back to it quite a couple of times, but not from the time frame that we expect. Now, when price came back to it, we saw a push to the upside, yeah, and we saw a new high. And with that in mind, we now know that this level is now continuing to go to the high time. It's going to the upside. And so we look for a consolidation level where we can trade from. But if you look to the opposing left, you can see there was a level the price should have held, which was let me clear this out. This is where we start talking about things like um um QMR, that's called reclaimed order blocks. So price should have traded away from this level, but it came below that level. So if price comes back again, we want price to trade away from that level and want our stops to be below the swing, always below the swing. Remember, if you're above the swing, your chances of you getting out is really high. So um taking this high to here, but mostly you just want to take more profit. So it's 1:2 is comfortable with me. So 1:2, you saw that it went to 1:2. You could have also just waited here and wait for a 15 minutes time frame to give you something, because I mean, like, the 1:2 is a little bit too big. You could have gotten better deal with 15 minutes time frame or 1 hour time frame, whichever one you wanted to use. You could have also done, look at that, look at lower low, higher low, and just like that, as price trades higher, we're like, okay, now we're sure that we're moving bullish, and we saw that engulfing here. It's really all that you need to tell, and that's it. So after that, we could literally continue to go higher and higher until the high time frame says, oh, we're no longer bullish, we're bearish now. So let's go to the weekly time frame and see what exactly is the market doing. So we've created a high here, we've created a new high, right? We've created a new high, and we had a higher low here. We had a higher low here, and we had a higher high here. So all this stuff, literally, you see that now. You see a new high, and price test coming back down here. We're like, okay, we're gonna trade from this consolidation part, right? We're gonna trade from this consolidation part. Price not gonna trade below it. If you go to the 4 hour time frame, it's literally the same thing that you're going to see. We're just looking for where exactly in that consolidation path on the weekly time frame are we going to trade from, and we're seeing that inside that range we have two levels. We have this one and we have this one. This was the origin, and we led to the high, and so we could just scrap this and just choose this level. And if we just choose this level, what do we see next? We put a buy position here, put a stop below the swing, and target 1:4, and you see the price just moves away from there so cleanly. It's just too good to be true. Like, it's just that simple. um it's the way it is. You can say it's high time frame, it's already happened. Yeah, it already happened, and that's why I'm showing you like this, so you can always identify it. It's just simple. It's a simple trick. It's not like you're trying to get sniper entry. Your profit target is not consistent. It's just depending on what the market is showing at the given time, and your patience level, and your level to just be like, okay, let's go to a lower time frame. Let's see what the lower time frame has to offer. If you go to a lower time frame, yeah, you get a better deal. If you go to a lower time frame somewhere else, you get an even better deal, right? Because this level was chosen from a 4 hour time frame, you could always get a better deal here on the lower time frame. Let's do that on let's see if 15 minutes time frame is gonna work. Choose match. Yeah, look at that. This was the trade. So when price came into this level, we're seeing lower lows, and we start to see higher high, and we saw that
price kept going high. It didn't take out this low, it created a new high. With that in mind, we already know we're now bullish. We can now get in on a trade from here, and we have a fair value gap here. Yeah, we had a fair value gap here, and we didn't have a fair value gap in this range again. So we could have taken a trade from here, put our stops below the swing, which is this one, because that was our validation point. And then we're gonna take in our profit target, extended it like this, and taking it to the same 1:2, and we had a 1:6. Do you see that? It's just that simple. Look at that. 1:6.43 from a 15 minutes. That is absolutely insane. It's not rocket science. It's the same trick over and over again. You just need two time frames. When the time frame is getting a little bit diluted, you want to go to and find the correct two time frames, and that's what you need, right? So go back to the weekly time frame and just look at this. Look at what is going on here. So what exactly are you seeing here? We're seeing that price from this point we had consolidation. So price is most likely coming back to this consolidation point because that was the place that led to this big push to the upside. I don't know if is there a fair value gap here. There's no fair value gaps here. Let's extend to see to be sure. There's no fair value gaps here. We have overlap of price here. Let's see what exactly this place looks like on the 4-hour time frame before we make a decision, because we can see that price was kind of hesitant here. I don't know, so let's just be sure that that place makes sense on the 4-hour time frame. So on the 4-hour time frame, what does that place look like, right? What does it look like? Right, so on the 4-hour time frame, we're looking for levels where we can buy from, and we have this level. Price never came to it, and then we have this level all the way down here, unmitigated level. So we want to choose these two levels, want to mark them out, and then we'll quantify them and qualify them, and then we have this other level here. And so for the first level here, we had the price already tapped into the consolidation part of the price. Price already tapped into it. If you do this, price already tapped into it. Yeah, price already tapped into the consolidation part of the price. About this one, price tapped into it, but the movement was a little bit strange. So okay, and then we had a retest from here. Our price traded above this. Yes, price traded from here and traded above this, and price came back and tapped into this. It continued to move to the upside, which means that if price is going to come back, it's going to go below, and the only level below is this one that was down here. And so we can use these open levels here for this one and just look that price is going to take out these levels all the way down here, because we already seen that when price came here we had this whole thing that happened here. So we're looking at price going to come to the extreme one, mostly because both of them are tapped already, but the extreme one has a little bit more credibility because of there's a thing that happens with price. Look at this. This level led to the breaking structure of after this breaking structure here, we had this second breaking structure here. The first push from this price did not give us anything, and then price traded below that and traded again, and still had like a failure kind of, and just like that. So all this whole bunch of thing that happened here was like a struggle of price from this point. So we're just looking at price coming back down here. When price comes back down here, look at the 15 minutes to look for a quantifier, but we're not sure. Let's smack that out and go to the weekly again and look for if we could find another level that makes more sense. Alright, so that was one of the levels. We can look again and be like, okay, so what else makes sense here? Currently there's nothing that makes sense, but this is the range where we're looking at. So if we go back to the 4-hour time frame, okay, let's do the daily time frame. The daily time frame can give us something. Daily time frame is a little bit less diluted, so we can see on the daily time frame we have price trading away from this level. Yeah, price trade away from this level, and we can have that the 4-hour time frame level has not been mitigated. Look at that. Oh yeah, look at that. Do you see that now? So this level on the 4-hour time frame, look at that. On the daily, this consolidation level was never mitigated. So what we need to see is this consolidation level being mitigated, not the other way around. Um, and so price wants to mitigate this consolidation level. So it's gonna use all of these levels as liquidity, most likely. All of this is gonna be liquidity, and then it's just gonna bounce up from there because every other thing is mitigated. So we're looking to sell from here. Most likely we're gonna sell off. We're already seeing um we're seeing lower lows, lower highs, kinda. Although we've seen the higher than this, we've seen the look at that. So we just want to see a proper lower low lower lows formation for us to continue. So okay, we now sell. So this one's a little bit tricky because we don't have further gaps, so we're not even sure that this level is gonna hold because if you look here again, you have a consolidation, but then the candle that took it out is also looking like a consolidation itself. So we could just say that all of this is a consolidation. Look at this one. We had a consolidation here, and then when price wait. Hmm. Well, this is interesting. Let me take out. Um, let me take out this. Yep. Put this back. So what I'm looking at is very simple. We had lower low, lower low. There was even lower low at this point, and so this lower low led to this new high, and the high led to low, and then continue like that. So um this was a consolidation point. This was a sweep, break to the upside, right? It was decisive. Consolidation point, sweep. It did not break. Consolidation, consolidation, and we had that push the upside. Price never came back to this level, which was there was a struggle here, but price came inside this range just a little bit and just pushed away, continuing into the upside. And fulfill the fair value gap order and just continue moving to the upside. So I'm not really sure if price is going to do anything here because it just doesn't make any sense to me because there's no fair value gap. But on the weekly time frame, it kind of makes sense if you look at it like that. I mean, it's the weekly time frame. So if you look here, we have this, but there is no consolidation. The consolidation was here, and then we had a rejection here, and then we had sweep again, and then now we have this, and it's not even a new high. It's like just higher than this high. Like okay, there's a low, this is a high. Okay, that could count. That could count. Let's go to the 4 hours and see it clearly. All right. So let's look at this in the 4 hours. We're seeing lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then we saw high high. Okay, now that's bullish. That's a bullish signal. And we already know the price is most likely going to continue to the upside, right? So we come here, we see price trading away from this consolidation zone, which makes a lot of sense. I already see it is tapped in the fair value gap zone. So we are very confident that price is most likely going to go up at least to this level. If nothing else, is going to go to that level, which is the high here, and create a new high. And
most likely going to continue from there and take out this previous high. After all, we've just created that high and created a new low. So we're probably going to just trade away from here and just, this is more feasible than me trying to force price to just trade from these lows, because there's nothing there to trade from. Everything here has been filled, this efficiency. The price goes there, I'm not really sure I want to be involved until the move has consolidated itself. But this is much solid move. I think I saw this the other day, yesterday, so and I tried to get in on the trade, but I was getting too a little bit too early, maybe. Just so let's go to the 15 minutes, because the 15 minutes, that's where we want to see that shift in structure to the upside. So in 15 minutes, we have um low, 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 low. Then we had, this is just the last high low, and then we had this. Okay, and then we had this, and then we had this. I think that was when I was trying to get in the trade. So here the price just took me out. I was still wondering why it took me out. So I just want to look at it again and be like, okay, why did it take me out? Because I was like, okay, we had a low, now we've created a new high, then it goes that low. Or is it that price is not looking at this as a low because the origin of that break structure, because if you look at the break structure based on candle breaking, could look at the break structure as from this high. So it's probably looking that, okay, this high is still resistant, right? If price is above that high, all right. But let's go to the 1 hour, maybe, I don't know, and see what we'll see there. I'm looking for fair value gaps though, just really not seeing any fair value gaps to the upside. Let's go back to the 4 hours and see if we see anything. On the 4 hours, we're just seeing price candles just doing stupid stuff. So we've not really seen any fair value gaps to the upside. So the move probably is not complete. It's just an early buyer's trap. We already failed that trade. So probably price wants to come back a little bit further and fill the fair value gap even more, because that is the only way that price is going to trade away from here. Yep. So this is our trading idea here. We're just expecting price to trade away from this range. Unless price trades below this level, we're looking to buy from here. And so I want to see 15 minutes time frame give me fair value gap to the upside. Once I see fair value gap to the upside, and I'm interested in buying, I'll just start to buy from there and then target this highs all the way up here. Put my stop below the swing of that fair value gap to the upside, and just that is really what I'm looking for here. I'm just gonna wait for price to open, and that's like what we look for on the AUDCHF. And that's really how I'm trading these days. It's really simple kind of trading style. Yeah, so that's it for this video. So hope you guys could watch the video and learn a lot from it. So yeah.